All right, so the other day I said, I warned people about buying stocks with high dividend yields and low PEs because the price declined so much. That could be misleading. A high dividend, a guy had emailed me or something, maybe, I guess emailed me about what do I think about AT&T with a 7% dividend yield. I said, you always got to be suspect of that. And the reason for that, for one individual stock for sure, because the reason for that is, can it still maintain its dividend payout? So remember, the dividend yield is based on price of the stock today divided by the actual dividend it paid out last quarter. All right, so usually dividends come out, certainly in December. Some do quarterly, not very many, I don't think. Maybe, I can't remember. Certainly some do twice a year. So there might be a dividend coming out here in the end of March, which is literally the next couple of days. I don't know. A lot of stocks do or do. I just, off the top of my head, I can't remember. But just remember, as we sit here today, the last dividend payout was in December. All right, so that amount of money was paid out in December. You take that, divide the price into that dividend per share, and you get a dividend yield. So again, if you have $1 dividend per share, all right, and you get a $100 stock, you take the $100 stock and divide it in $1 dividend share, and you get a 1% dividend yield. That's how it works. Now, the dividend payout actually itself hasn't changed yet because we don't have a new dividend payout number. So if the stock is down 50%, we take that $50 divided by the most recent dividend payout of $1, and that gives us a 2% dividend yield. Our dividend yield is increased by 100%, it's doubled. And the only reason it did that isn't because the dividend amount actually increased. It's just because the dividend amount is based on the last quarter's dividend payout, or the last time it paid out. Again, I think every stock pays out in December that has a dividend. I don't quote me on that, but by and large, stocks pay out in December for dividends. Some pay out quarterly, some pay out twice a year. If they're paying out dividend, the vast majority of the time they're paying December. All right, so you're looking at the previous dividend payout, $1, and you're dividing it by the current stock price, which is 50. That gives you a 2% dividend yield, which looks a heck of a lot more attractive than a 1% dividend yield back in December. Hope that makes sense. Now here's a challenge. Let's just go back to AT&T. What's the likelihood AT&T is going to maintain that $1 it paid out? I have no clue. I have none whatsoever. I don't know. So that's the challenge you have for buying a stock based on a high dividend yield, because the reason the high dividend yield is so high isn't because the dividend has changed, it's because the price has dropped. And in this day and age, AT&T might be a good example of a company that can make fine because everybody's going on the internet, streaming and all that. I just don't know. But be careful in that. All right, now let's look at the same thing when it comes to price to earnings. I just checked my VTV. PE ratio is now down to, I think it was like 8. 8 is the PE ratio. Again, that is based on last quarter earnings, the end of Q4 2019, divided by today's price. All right, off the top of my head, I can't remember the price. It's like 84 or something like that. So the last quarter's earnings were X divided by today's price, which is Y, which means that the PE ratio, price earnings ratio, is 8 in single digits, which is fantastic. Everybody and their mom been saying the equity prices are too high relative to earnings, and now that's not true. But I caution you, when the quarter earnings come out for Q1, it won't be 8 anymore. It's going to be significantly higher PE ratio, if not 0, because there is no earnings. In fact, it probably has some. We'll see. I have no clue. And the PE ratio is going to be significantly higher, if it exists at all, come Q2 earnings when we go into this depression that we're going to face. So here's a challenge. It's a huge buying opportunity if you think the PE ratio, or I should say the earnings from Q4 2019 are more likely to come back to fruition, because once businesses kick back in, that is representative of the true earnings. It's a huge buying opportunity. You are saying, I can get VTV at $8 price to earning, which is freaking $8 price versus every dollar of earnings. Literally just 4 months ago, I was getting at $17 for every dollar of earnings. So in the last 3 months, so it's really the last month, the price I have to pay for a dollar of earnings has dropped in half relative to PE ratios. Now that's a freaking smoking deal. Now the question is, will those earnings matriculate to back where they were a year, 2 or 3 years from now? I happen to think yes. In fact, I'm so confident of that I'm hesitant. I'm almost this close to just taking all my emergency money and dumping it into VTV. But I can't do that. I can't. I don't have the guts. And you shouldn't have the guts either. But, some people do. I don't. The people who do are the ones that make out like a bandit when they're right. When they're wrong, they go bankrupt. I just can't do it. I don't have the guts. So I just okay. PE ratios right now are at 8. I'm in there. I'm still, dollar cost averaging in there. I invest $1,000 a month to VTV. And so because of that, no, I do $1,000 a month to VBK. I bet those earnings are even PE. Actually, I don't know where the PE ratio on VBK is. It's the same concept though. Everything's down 35%. Inherently, PE ratios, if there was any earnings, are down as well to be in the incredible cheap stage. It might not be single digits, but the low double digits. We haven't seen that kind of buying since freaking 2008. It's crazy. But we also haven't been through this cycle that we're going through. So one could easily make the case that it's going to take 3-4 years to get back to where earnings were pre-pandemic. Or we might never will because of whatever. I mean, that's the issue. We don't know. But welcome to the world of stock investing. Stock investing is to take risk. Risk is you assume that something will happen to keep your price rates, to keep the earnings growing, i.e. something happened, corporate growth will continue on. If it turns out to be wrong, well, you could lose your money. If it turns out to be right, you could make a freaking a boatload of money. I was getting ready to say it better where I'm starting to get rained on now. All right, so let me turn this off before my phone goes bad. We'll see you.